Yeah.
Yeah, okay.
No, it's looking at me.
Is it?
Miriam's live.
Taking too many selfies on it.
There you go. How's that? How's that?
Are we? Yeah. Are we?
Okay. Good morning. So my name is Raymond Gibbons from BMS Accountants here in Navan, and I'm here to do a Q&A session for you in your startup businesses. So we'll go straight into it. I know Miriam has given me a few questions that you'd like to go through first. So who'd like to ask the first question?
I will.
Yes.
What has been the impact of, or what will be the impact of Brexit in Ireland? Do you have any insights into that?
So just again, for the in case it hasn't been picked up, it's what impact will Brexit have on Ireland and startup businesses? It's really very difficult to know, because Brexit, at the moment, there's more debate about when the Brexit's finally going to be announced by the UK. So we don't really know what the impact is going to be, other than that we have volatility in the foreign exchange markets, and we're not sure whether there's going to be tariffs and additional taxes on importing and exporting from Britain. So I think they're really the two big issues that people are talking about. So in the first one, with the tariffs that may come down the road, we don't know what's going to come down the road. Britain is now negotiating whether it's going to be a hard or soft Brexit, or exit as they say. And the truth is, nobody actually knows. And it's going to maybe take 2 to 3 years to actually find out. So I think the biggest issue for you is the foreign exchange. If you're exporting or importing from Britain, is going to be the foreign exchange fluctuations. And that's no different than it was in the last 25 years, or even before that, because sterling has always been outside of the Eurozone, so there's always been fluctuations in there. So if you look back 2015, I think the foreign exchange rate was averaging about 72 cents. And all that's happened, 72 pence, and all that's happened here now is because of the volatility, it's actually averaging nearer 84, 85, and it's been going as far as 90. And if you're selling into Britain, what that means is that you're getting a lower margin on your product. What therein is a fundamental problem for me when people actually start selling in foreign currency. If you're relying on foreign exchange rates to make your margin, well then you have a real problem with your business, because your price should be dictated by the costs in your business, the quality of the product that you have, and what the consumer is going to pay for it. So if you're going in and trying to undercut others by selling at a lower price to get a foothold in the market, and you're relying on foreign exchange to actually to make your margin, well then you're going to be exposed. So you want to put in place a plan for dealing with not just Britain, but any country that has a foreign exchange. And the plan for me would be this. If I'm selling into the UK and I have products that I'm selling in, I would then look and say, am I buying anything from the UK in sterling? So I would pay for those out of sterling and reduce my exposure. Does that make sense? Any sterling I'm getting in from sales, I'm then going to have any purchases that I'm buying in from Britain in sterling, I'm going to pay out of that sterling. So I've got less sterling to worry about from the point of view of fluctuations in the FX rate. Another thing I might try and do is to try and sell in euros. So I'll approach my customers in the UK and I'll say, well look, I can price you in sterling, but let's remove all this volatility for both of us, and why don't we just agree a euro price? And that way then you don't have that problem with the foreign exchange rate. The other thing you might try and do then is if you're buying in from the UK, again, approach your supplier and ask them will they deal with you in euro. Because again, you're not there to speculate on foreign exchange rates. Much better for you to have a fixed or an idea of what you're going to be paying out in sterling or euro to a customer, and you can price accordingly. Does that make sense? Mm-hmm. And then what you might be looking to do is not to be over dependent on Britain. It's as easy to sell into the US, China, France, Germany now as it is to sell into Britain. And you know Britain is, I think it's the 5th largest economy in Europe, in the world. So it is a vital economy. But it doesn't mean that we have to be blinkered and just say everything we're going to sell into our next door neighbour. The European Union is a big place, so it's just as easy to export. So to summarise, I'd say we don't know what's going to come down the road. We don't know what they're going to negotiate by way of exiting the EU. But equally, you need to have a strategy in place for dealing with any customer outside of Ireland. Will that be fair?
Yeah.
Okay. Anybody else? Yes.
Will there be tax consolidation in Europe
Ever? Great question. And will there be tax consolidation in Europe ever? Eventually, I suppose there will be. But is it something that we need to worry about now? Again, I don't think so. I think what will happen is that Ireland will not, they'll be holding on to this. You were talking about the 12.5% corporation tax rate. They'll be holding on tightly to that. And again, going back to the Brexit question, I would say, well, I know if I was on the negotiating table, so if Enda Kenny's listing, I'm available and my rates are very good as well. But if I was there, I'd certainly be saying that if there's going to be a hard Brexit for Ireland, and we seem to be the country that's more concerned about Brexit than any other EU country, I'd be using 12.5% as holding on to it as a bargaining chip. So in other words, you know, you're going to use that as leverage. It'll eventually come, I guess, because but it's not something that's going to come overnight, so I wouldn't be too concerned about that at the moment. Okay. Anybody else?
Yeah, is it unusual to make a loss in the first year in business starting out, or is it usual that you would see?
Not unusual to make a loss. So I mean, making a loss when you start out in business is quite common, because what happens is you've got a lot of startup costs. You might have extra advertising costs because you're trying to launch your business. You'll be buying a lot of equipment, maybe from furniture to PCs, to pop-up brochures, wherever you go. You might be doing a lot more travelling to try and get your name out there. So you might be incurring a lot more, or you will be incurring a lot more costs when you're starting out in the first year. And don't be concerned about making losses in the early years, because like I say, it's very common, and those losses can be offset against profits in later years and reducing your taxation then. Okay.
How do you calculate your tax on PRSI liabilities?
Your personal taxes.
Yeah.
Okay. So are we mainly going to be, the question there is around taxation and how do we actually calculate our tax liability at the end of the year. So are we all operating as sole traders at the moment? Yeah? Okay. So the difference is with sole traders and being a limited company, for example, as sole trader you're going to be paying tax on any profit that you make in the business. So Miriam, I don't know what you've covered in your course yet, but if you're looking at your sales, your net sales, you deduct off that all your business expenses and you're left with either a profit or a loss. Okay? As a sole trader, if you have a profit of, let's say, €20,000, you're going to be paying tax, which is your PAYE and your USC and PRSI, all on that €20,000. Okay? And that's going to be, you're going to file it once a year, which will be at the 31st of October every year. You're filing in arrears for the previous year's profits. And you're going to file that using what we call Form 11, which is a revenue tax. Well, your accountant will do this for you. You'll file an annual return to the tax office telling them of the profitability of your business, and the tax will be calculated on that. The difference is that most of you being in PAYE work, working for companies, you get a paycheck. And so you pay what we call tax at source when you're getting a paycheck every week or every month, yeah? But as a sole trader now, you're going to be paying it purely on the profit of that business. And of course, if you have any other income, you need to declare it as well. So if you have a rental property, or a rental property in Sligo, let's say, whatever, or another home that you're renting out, you're going to have to declare that also from the point of view of paying tax. Because you have to declare all of your income. Okay? Do you want to explain?
Yeah, just how would you work out paying yourself? And then
a weekly wage.
Yeah, weekly wage. How would you set that?
Yeah, what we call that is drawings. As a sole trader, we call that drawings, not a wage. Okay, so that's the cash you're taking out of the business. And let's say you're taking out €500 a week out of your business as you're going along. You don't physically pay tax on that €500. So if your business can afford to pay you that, that's fine. It's at the end of the year when you look at the profitability of the business that you would be saying that's what I'm going to pay tax on. So you have a net profit or a net loss figure. You have your sales, as I said, and you deduct all of your costs, which give you a profit at the end of the year. And that is what you pay tax on. But during that year, as you're being paid by customers, you take out money to pay your mortgage or to pay your rent or whatever else. And we just call that drawings. But drawings is not taxable. If you were a limited company and you were a director of that limited company and you were taking out €500 a week, that would be coming out or could be run as a payroll to you. So that would be a tax deduction from the point of view of the company, and you would pay tax at source on that €500. But because you're all sole traders, you're going to declare your profit at the end of the year, and that's what you're going to pay tax on. Is that okay? Anybody else?
Can you deduct an amount for office rent if you're working from home?
Yeah, it's a common question. Can I deduct an amount for office rent? If I'm working from home and I'm using my den or I'm using the garage, can I charge office rent? You can, but there are pitfalls to this. So you could technically charge an element of your mortgage interest. But there's pitfalls to this. If you own your own home, and it's not advisable to do it because of this very reason. If you own your own home and you sell over, you're upselling, you're moving up to a bigger house, you're selling your principal private residence, and there's no tax, there's no CGT, capital gains tax, when you sell your principal private residence. But if you've been working out of your own, now working out of your own home is fine, but if you've been charging a rent for working from your own home, revenue could look and say, well, you've changed the actual status of your home. It's no longer a principal private residence, it's a principal private residence plus an office that you have on the side of it. So they could charge you capital gains tax on that portion of the building. So again, if you were selling a house for 300,000, and we're just going to keep it very simple, and we say a third of that was being your house, you were charging a rental charge for a rental charge to your business. Revenue could say, well, that 100,000 that you sold, that 100,000 element or that third of the house should be subject to capital gains tax when you sell it. So it's not advisable. There are other bills you can run through your business which are quite, which are tax deductible and quite legitimate. So I would not advise charging any rent on your from working from home. Okay. Yes.
Following on from that, what would you say are the legitimate expenses? What can you put towards your against the profit you get over the year?
Yep. A couple of rules of thumb that I work off when I'm dealing with clients. The first one is, if you actually think it's a genuine business expense, the odds are it will be tax deductible within reason. We'll go through them now in a moment. And then the other rule of thumb I have is, if you're not sure, get your receipts together and give them over to your accountant. He or she will go through them, and they will remove out of those what they believe are personal expenditure, and will come back to you and say, look, these, I'm not allowing these through, and they'll give you a reason why they're not allowing those expenses through. So let's start with working from home. If you're working from home and you're using a den which might take up, and kids are in school or whatever it is, so you're working from 9 to 5 at home, you have the heating on, and you're using the electricity and what have you, you could charge a reasonable percentage, let's say 20-25% of that. You lead your accountant, you'll say, well, look, I'm the only one at home, I have the heat on in the winter from 9 o'clock to 4 o'clock because I'm working at home, and I want to charge a certain amount of light and heat to my business. That's legitimate business expense. Other business expenses that you should be able to claim for is the use of your car. Now, again, it's not the full use of your car. It's the use of your car that's attached to running your business. So if you have a car and you find that you're constantly on the road from the point of view of selling, well, then you'd be well entitled to write off a good portion of the car expenses, which would be insurance, motor tax, diesel, repairs, all that type of good stuff. But the thing to watch out for there is that you don't charge, you have to allow for a personal percentage, personal usage expense as well. So in other words, when you're driving Saturday, Sunday, so you turn around and say maybe 20-25% of the car use is personal, and we just make a deduction for that. Does that make sense?
Mm-hmm.
Yes.
How about phone, internet,
Yes.
all that?
Yeah, broadband would be allowed. Revenue wouldn't have an issue with you charging broadband, because most of us have broadband at home, and we use broadband primarily for our business. Because you'll know this once you're running your own business, you're never really switched off. You're at home and you might be doing a bit of marketing at home because you don't want to do certain things during the day, because that's the time when you're going to be servicing your clients. So there are expenses that you can charge at home. If your phone bill, I would always say it's just the broadband package that you allow. I don't allow personal. When I talk to clients, if they have, unless they can specifically say, well, look, I was at home and I'm phoning America at such and such a time talking to a client, and there's the itemised bill, we'll take that. But generally, I don't allow calls. I would just take the broadband. You could then, looking at other business expenses, I think you just watch out for, as a sole trader, you're not allowed to claim for lunches. Whereas if you were a director and you were in a limited company, you'd be allowed to claim subsistence or claim for some lunches. Not client entertainment, you'd be allowed to claim for an element of subsistence. When you're claiming motor expenses as a sole trader, you claim on what we call the vouched receipt. Okay, so you have to have a valid receipt for your petrol and your insurance and your motor tax and all that type of good stuff. But if you were a limited company and you're a director in a limited company, you would be allowed to claim mileage instead, if it was working out more beneficial. Just watch for that. I've had clients come in to me and they say, oh, I've never kept any motor expenses, motor receipts, because I'm claiming mileage, and they're sole traders. You can't claim mileage as a sole trader or subsistence. Okay?
Is it usual then, when you're starting off, to have a shoebox, literally, and put all your receipts in for everything? Or would, make it easier for the accountant to say, well, separate them into these things?
I'll give you a top tip, and Miriam could vouch for this.
Okay.
If you bring a shoebox into an accountant, they're going to charge you for going through that shoebox.
Yeah.
Okay?
Yeah.
So I would say make it very easy for the accountant. Have 3 or 4 files. Okay, one might be a LibreArch file that will have your purchase expenses and your receipts and all that type of good stuff. A second file might be sales invoices that you have in there, and a third file might be bank statements, visa statements, and revenue correspondence and what have you. You bring it in an organised manner and on spreadsheets, as you say. I give an Excel spreadsheet to clients and they populate that and they send it over to me, and the receipts just we match it off. We reconcile the receipts to the Excel spreadsheet. It makes it very easy for me, and it means I'm charging less. When you give me a shoebox, I'm going to have to charge you for my time going through a shoebox. So get organised, and for yourself get organised. Because if you're just operating on a shoebox principle, and I know where we're going with it, it's very hard for you as a business person to know how well your business is doing. When a client sits in front of me and says to me, Ray, I think I have a good year, my sales are X, and I'm expecting a profit of this, or I've had a tough year and I'm going to have, I think I'm going to have a loss of whatever. There in front of me, I have a client who understands their business and is in control of their business. So I'd say for your own, even more so than me or your accountant, for your own benefit, make sure you stay on top of the admin and don't leave it months and months. Keep on top of it on a weekly basis. Anybody else?
Say you get an accountant involved at the later stage of you starting up your business. At what point do you have to actually start collecting the receipts? Do you have it like from the very day you conceptualize the idea for your business, or do you have it simply from when you hire the accountant?
No, when you start out in business, you should look at, if you've decided to start up a business and you've looked at and you've got a business you're going to run as of today, let's say, or in the next one, register your business now.
Okay.
And start gathering your receipts. So you might come to an accountant for a consultation and you're going to spend €200-300 maybe on a consultation, or maybe 150, it doesn't really matter. But the point is that you want to be able to offset they're your startup costs. Mm-hmm. When you go to see a consultant about tax advice, that's a startup cost. That's what we were talking about earlier. These are the costs you incur when you're starting out. You want to make sure you write these off as valid business expenses. So register your business. When you register your business with revenue, they do give you an option, and it says, when did this business start from? So if you were 2 or 3 months late in registering the business, generally we could go back and give them the start date. Where are we now? We're on the 3rd or 5th of March, whatever it is. So we could go back to maybe the 1st of January and say, my business started on the 1st of January and I'm declaring expenses and sales as of that day. Yes? And so you gather all the receipts, just keep everything going forward. Don't just wait until you pick up an accountant, because they'll be looking for all this information off you.
Okay.
Yes?
And how long do you need to keep the records?
6 years. So you keep your tax records for your again, in case of an audit. Revenue can go back further, and I've seen them go back further. So you could turn around and say, well, after 6 years I'm going to destroy all my business records. But the truth is that revenue then could even go back further. If you had a revenue audit, they can ask you to produce bank statements and to go to the bank and to show where the income came from. So, but 6 years is generally the rule of thumb. Anything else?
Are there any tax breaks for like new business startups?
Tax breaks for new business and startups. There are some. Again, it depends on the investment that you're putting into the business. So if you're looking at, I can give Miriam a full list of all the various startups you have. You've got a lot of local support here as well. You've got the local enterprise offices. If you haven't already, link into those and get updates from the point of view of enterprise weeks and enterprise days that they're running. I know they're advertising those on the radio now at this moment in time. But also there could be feasibility grants that you might be able to avail of. Again, they're geared for the small businesses, so they would help with marketing funds, with going to hire an accountant, with going to perhaps key events that you might be able to attend, and you will get support from the local enterprise office for those. And then they have what they call priming grants, which is you're started out in business, now you're a year in business and you're looking to develop the business further, and they have maybe priming grants that you might be able to avail of. The criteria changes, but in general what they're looking for are local businesses that they feel will generate obviously employment. They're also looking for local businesses that have an e-commerce side to them. And they're very big into this particular area. So certainly from a local point of view, you would want to look at your local enterprise offices. If your business then, if you're looking at investing a lot more money, maybe they would pass you on to Enterprise Ireland or someone like that. But certainly there are a range of grants and a range of tax supports. And what I can do is I can forward on to Miriam a more detailed list of those for you, okay? Go on.
Do you have to register for VAT straight away, or?
There's two reasons I would say when you look at VAT. Firstly, there's the thresholds in VAT. So registering for VAT it's a very important business decision, okay? And we just go with the very basics at the moment. And what you have, if you're selling goods, you don't have to register for VAT until you know that you're going to be selling in excess of €75,000 worth of product. If it's services, it's 37,500. Now, it's not a case of running your business for 9 or 10 months until you get to those thresholds. When you start out in business, again, when we're registering businesses for VAT, you're asked a question: do you think it's likely that you're going to get to those thresholds? And if you think it's likely that you're going to get to those thresholds, then you should register for VAT. Now, from a business point of view, though, there's a couple of other commercial reasons that you might think about for registering for VAT, even if you don't need to straight away. Firstly, if you were investing in buying some equipment, you can claim the VAT back if you're registered, so you get a tax refund and that can help with your cash flow. Another reason would be when I started out in business, I think it's 8 years ago now, I made the very conscious decision to charge VAT from the get-go. And the reason for this was I wasn't sure who my client base was going to be. I knew I was going to have an element of business people, and that's fine because they can claim the VAT back. That's not an expense for them. But if you just come into me as a general consumer, a person on the street who's not registered for VAT, VAT is an expense to you because you can't claim it back. Do you follow me? So what I was concerned with was that if I, again, just use rates, if I was going to charge €100 an hour for my work, and then eventually, after maybe a year or two, I find that I'm hitting this VAT threshold, and now I'm going to have to register for VAT, all of a sudden you're walking into my office and getting a bill for €123. If you're not registered for VAT as a business person, you can't claim that VAT back. That's an expense to you. And I didn't want my clients walking away a year down the road thinking, that's a 23% price increase, when all I've done is charge VAT. So you have to think of your business. So from the point of view of cash flow, am I investing in some heavy equipment and that might be worth me claiming back that VAT and helping my cash flow for the business? Secondly, am I going to hit the VAT threshold at some stage during the year of 75,000 or 37.5? And if I am, I'll register for VAT. And then thirdly, what's the impact of my business going to be on consumers who may not be able to claim back the VAT if all of a sudden I start charging VAT 12 months down the road? So there's various reasons you might think about for charging VAT. Does it make sense?
Yeah.
Yeah, okay.
So do you pay the VAT yearly as well?
No.
No.
When you start off in business, you'll be paying VAT bi-monthly, so every 2 months, okay? And what happens is, so January and February VAT, perfect now, will be due for filing later this month, paid on the 23rd of March, and I think it has to be filed on around the 17th of March, something like that. So when you start off in business, you're going to be filing VAT every 2 months. As you develop a reputation or with revenue for paying on time, they may extend that, and they may push out to quarterly or 6 monthly. I don't like that from a business perspective, and I think it was ill-conceived personally from a revenue point of view, because if you're a small business, paying VAT every 2 months is helpful because it's not too much of a strain on your cash flow. But if all of a sudden you're making VAT returns every 6 months, you've got to be very prudent and make sure that you keep your VAT liability parked away in a separate bank account so that your business doesn't consume it for working capital. And then 6 months' time, you've got a VAT liability, which is probably 3 times what you'd normally pay. Does that make sense? So I don't like the 6 monthly. So when I have clients that are moving on to 6 monthly VAT returns, I'd contact Revenue on their behalf and ask that could we go and start paying our VAT by direct debit, which is a monthly direct debit to Revenue. Helps with everybody's cash flow. If you can start paying out a bit of VAT every month, it means your liability at the end of the year, if it's managed correctly, shouldn't be too high at all. So you have to be careful with that. It can hurt a business.
Is that a time-consuming process of actually paying the VAT each month? Do you have to list every person?
It's time-consuming. Maybe what I'd say is that when you set up any new system, it can be time-consuming until you get used to it. But again, a simple piece of advice I give to clients is this: if you're charging 23% VAT out on sales, and you're claiming back VAT. So you offset the VAT on purchases, your purchases, against the VAT on sales that you would pay over to revenue. Your effective VAT rate might be around 16-17%. Does that make sense? Yeah? So what I would say is every time you get a check in from a client, take 20% of that check and just park it over into a separate bank account for when we need to pay the VAT. And you just keep a track of all your sales invoices and all your receipts. And we'll come on to that now in a cash receipts basis for declaring VAT. We'll come on to that now in a second. And that's the best way of you managing it. Every time you get a check in, take about 20% of your check and park it away to cover your VAT and maybe a little bit more for your income tax at the end of the year. And that way you're not getting any nasty surprises. If you have a very good profitable year, you're not going to be ending up owing revenue to, you'll owe the money, but you'll have the money set aside to pay it, and you won't be concerned about how you're going to pay your tax liabilities. So managing your, work with your accountant on this. Your accountant will be more than happy to sit down with you and put in place a system and say, look, if you're operating your business on a monthly basis, keeping a track of it like we said earlier, you'll know how much cash is coming in and out of your business. And if you park a little bit aside every month, you're going to cover your tax liabilities. I would say that's critical for any small business starting out. I moved there, I mentioned cash receipts basis. So this helps with your cash flow as well. You have two ways of declaring VAT, either on an invoice basis or a cash receipts basis. So if we're here today and I'm charging, let's say, €1,000 for today, okay? There's €230 VAT on my invoice. If I'm on an invoice basis, that VAT will be falling due in May, because the next VAT return will be March, April, due in May, yes? But if I charge it on a cash receipts basis, and let's say Vitos doesn't pay me until June, I won't have to pay my VAT on that invoice until I receive the money from the customer. Does that make sense? So it's a cash receipts basis. What it means is you're not declaring VAT until the money comes into your bank account. So if you have a problem with slow paying customers, which is a different thing altogether, you want to keep on top of that, but if you had a problem with slow paying customers, at least you don't have to incur their VAT liability until they actually pay you. Does that make sense? Mm-hmm. And it's a very good way of managing your cash. Again, though, when you're setting up with revenue, you have to tell revenue this. So when you're registering as a sole trader, there's an option there for you to take and say, when you're registering for VAT, will it be on a cash receipts basis? And then it'll ask you why. You know, to make sure that you can avail of that. But again, your accountant will help you set it up. That's why it is important, by the way, and I'm not just saying because I'm standing here. I see a lot of people setting up businesses themselves, whether it be limited companies in particular, and they set it up themselves without giving the advice of an accountant, and it ends up costing them more money to get it set up correctly. So do go and talk to someone about this, and for a small price you would actually get your business registered with revenue and set up correctly.
And what are the rates for the consultancy for an accountant to get this sort of business set up, would you say?
I don't know all accountants, but I know I can tell you what I would charge, okay? And I don't mind saying that, but consultancy would cost you in the region of about €100 plus VAT for an hour. Now, again, if you're going to sign up with your accountant, the reason for that is we get a lot of people walking into our businesses who would want advice, and they'd say to you, right, like what we hear, we're going to go away and sign with you, I'll be back to you in a couple of weeks and we get going. But then they've gone to another accountant or so on. So you've lost that sale. So generally what you say is you charge, and this is something for yourself, free advice, don't give it, you know, because you're now in the process of trying to put food on your table, and starting out as a sole trader, starting out in business is very difficult. If you have a quality product or a quality service, stand over that quality product and quality service and charge appropriately, okay? You can, of course, help out clients. So if a client comes to you for consultancy and then they bring their business to you, you might turn around and say, well, I'm going to waive half of the original consultancy fee as a gesture for coming back to me. Something else. But do make sure you put a value on your business, because too many times I see people are very, very busy running around they're giving away free product, they're giving away free consultations, and then they're telling me how difficult it is for them to make ends meet. And if you've taken the option of going into business for yourself, enjoy it, but make sure you put a value on your time and a value on your product and service. Very important.
Yeah, that's a good point, because at the process that we're at, we're only kind of coming up with our business plans and our ideas. So actually trying to figure out the value of your time, and you know, for example, mine is a service business, or so you have a finite number of hours in a week, and you're one person.
Yes.
So in order to value your time,
yes,
to make your business profitable, Have you any tips or suggestions?
Yeah, it can be difficult in the beginning. The way I would look at it is, if you're offering a service in particular, it's difficult. When you're offering, when you're selling a product, you're buying it in, or you're making it, and you're adding a margin to it, and you can say, and I know what people are, the recommended retail price is for a similar type of product. But when you're trying to put a value on your own time, it's very difficult. So it depends. If you look at it from the point of view of a qualified accountant, let's say, okay, who's left a really good job, they know what their salary was per year, and they're getting pension, and they're getting holidays and what have you. So if you were to take all these costs in other words, what's a qualified accountant earning in Meath, and they're going to have a pension contributions, they're going to have holiday pay, and they're going to have all these bank holidays and what have you, and they total that up, and they say, dividing that by the hours I do, there's an hourly rate. But you generally don't get that same hourly rate as a sole trader. So, but it's a good indication of what your time and value is worth. Okay, doesn't mean you're necessarily going to pay it out, but or charge it out. But what it does mean is you have a very good idea of how much business you need to bring in to cover your previous salary. So it's very difficult to put that's one way of actually just getting a value on what your time is. Now, the other thing to do is to look at what competitors are doing. So make inquiries. People like to talk about their businesses. And you'll find that if you go around, you will attend trade shows, attend various functions where there might be other people in a similar type of business that you're in. Find out what their rates are. Go online, do your research, and find out what the competitors are charging. Also, if you've got a unique service, you might want to do a little bit more from the consumer. Regardless of the business, you have to do research on your customers. Find out what your customers are willing to pay for that price as well. And it's very important, and you're doing a startup business plan here, yeah? It's very important, the marketing and the market research for your business is critical. You know, it's to spend time on that, to find out what your customers want. What are your competitors charging? Are there any ways of streamlining your services to make sure that you've got a very competitive price? But again, make sure if you're selling a quality product, you have to charge a premium price, in my view. Because it's very hard to lift the price. So if you've got a value on a product and you say, I'm going in at a reduced level, it's very hard then to lift that price and to get people paying what the true worth of that product is. Yeah?
Thank you.
Just on the VAT, if you only start paying VAT if you're after 37,500, is it?
On services,
On
yes.
services for the year. But if you're forecasting for the year, for your first year of business, and you're not quite sure, and you don't hit that threshold,
Yeah.
but throughout all the year you've registered for
Yes.
a month and you've been paying that,
Yes.
can you claim that back then?
No, you've made your bed so you lie in it, as it were. If you register for VAT, you go. But that does not mean that if at the end of that year you think to yourself, no, that's the level of my business. I've got clients of all varying sizes. I've got some clients that just have a nice part-time business going, and they'll never register for VAT. I've had clients who have registered for VAT and have got a business up to the level in sales where they're manufacturing products, and they went above the threshold and they were registered for VAT, and they've said, it's too much hard work for me, I want to pull this business back to below the VAT threshold. So we deregistered them for VAT, and they operate a much smaller scale business. So everyone's different, and why people go into business and what they're trying to achieve from that business, it depends on the individual person. But if you've registered for VAT in the particular year, you'll stay registered. You have a choice of deregistering. If you feel you're not going to hit those thresholds, you do have a choice to deregister for VAT. But of course then, if you find then later on that you are hitting those thresholds, you have to re-register again. And it's so you want a bit of planning should help you. It should help you have some understanding of where your business is going. Okay.
Thank you.
Yeah.
Anything else?
Can I just ask a question
Of course you
about education, and can you offset costs of any sort of upskilling or courses you do?
Well, yes. If you're going in again, depending on what you're training expense is what you have. So if you were, I'm trying to think of if you were a driver, you might be doing your safe pass or whatever these score. You can offset those. If you were doing a degree in college, what you would have is you part-time. You wouldn't claim it to your business. What you would do is you claim a tax credit for it through to offset against your income tax.
You can't do both.
No.
20% or whatever.
Yeah, it's what essentially happens. You have to be paying income tax to claim credits, by the way. Okay, so a lot of people still give me their medical expenses and their college fees for their children, and they say, well, why can't I claim back these? And they say, well, you didn't pay tax last year, so you can only claim back tax if you pay tax. So on the point of if you're going on to do a degree, what happens is the thresholds, I'd have to look at those. They've changed them, and they're not as generous as they used to be. So I'll email on the exact figures, but I think if I remember correctly, they have a disallowed amount of €2,500 or €1,750 for part-time courses. So the first €1,750 is disallowed as a valid expense, and anything you pay above that is tax deductible, or there's a tax credit for it, sorry. But I'll send you on the exact rates. Yeah.
And another question is, you're an entrepreneur yourself, and you're in business. Is there any books you've read or anyone that you look up to that you would recommend we?
I don't do a lot of self-help books, I have to say. I get a lot, but there are a couple that there are the 7 Habits from I think it was Stephen Covey or Stephen. It was one I read a long time ago. Yeah, it was the 7 Habits of Highly Successful People. I think that it was something along those lines, and I found that I've just enjoyed reading that. But I don't do a lot of self-help books. But what I do have is I do have a lot of books that or magazines that I might pick up. So it might be whether it's business-related magazines, that it might be just tips on how to manage your own taxes or tips on how to market your business. That's where I find as a business person we fall down. You try and when you're a small business, you're going to find that you're responsible for everything, from doing the accounts for the clients, to getting your office prepared for meetings, to marketing your own business, all of that. And we don't know it all, so we're learning as we go. Or you might have IT issues. So if you haven't got the funds to bring in outside help, you're going to have to try and upskill yourself on certain things. So while I don't have a lot of self-help books, I certainly pick up articles, and I do a lot of, I do spend a bit of time researching new marketing techniques, such as the Facebook streaming that a client advised me about last week, so we'll see how it looks later. But it is one of those things that, it's all personal choice. I know people who would buy self-help books every month. And that's good for them, because if they need to have something to give them a bit more confidence, or if they get something out of those books, well, why not? If that's what you want, they can be very, very supportive. Although, just going back on one thing, if there was, I remember a long, long time ago, working in the UK, I think it was NatWest, the bank at the time, I think it was, they issued a startup business book, a startup guide to business. Now, it was internet, as it were. Yeah. But it was a fantastic startup guide, and I've looked around for something like that for an up-to-date version of that. I've never found it. It's a fantastic guide.
And just on the fact that we're all kind of starting off as sole traders. As a sole trader, can you employ somebody if your business kind of scales up and you need a second person or a third person? Yeah, absolutely no reason why you can't employ people as a sole trader, and you're just paying them a wage as you would as you would in any normal company. So, and it is advisable if your business is growing and you're finding yourself stretched, do get support out there. I know that I've used in the past, when I was a sole trader, I'm a limited company now, but in the past when I was a sole trader, I did use JobsBridge as it was back then, and that was ideal for small businesses because you could get someone in an apprenticeship who wasn't just making coffee. They were actually learning some very valuable skills by working in a small business. So I think there's changes to that this year. We're waiting for them to be announced by Minister Bradker, I think. Or wherever, I think it is his area. So that was a fantastic incentive for people to take on employees. So look for that. But yes, you can recruit staff as a sole trader. And the other thing is then, can you change your business from the status of sole trader to business if it grows? Yes. Yes. And is there a benefit? When does that benefit kick in? It's again, a lot of it is down to choice, okay? But yes, you can change the structure of your business from a sole trader to a limited company at any given time. The idea behind that now, again, there's different accountants might have different views, but just from my perspective,
what I would look at is you're paying tax as a sole trader at the lower rate of tax, okay? So you're going to be paying that at 20% plus, and then you don't want to move into the higher rate of tax if you can avoid it. So one of the things that you might say is that the standard cut-off point is €33,800 a year. Above that, you pay the higher rate of tax, all right? You might look at the first thing and say, well, if now my business is going to show high profits, 50, 60, 70,000 euros, and I as an individual do not need all that, then maybe it's best to convert to a limited company and only take out the salary you require to live on, leaving the remainder of the cash in the business. Does that make sense? Because in a limited company, you're going to be taxed on the cash that you take out of the business by way of payroll. If you only need 20,000 euros to live on, if you are happy with that salary, 25,000, well then you wouldn't want a business that's generating profit, a sole trader business that's generating profits of 50 and 60,000 euros, because you're going to be paying higher tax on that. By converting to a limited company, you'll only pay tax on the money you take out. But what will happen is that if it's a close company, which most companies in Ireland are, there could be surcharges there if you don't distribute the profits at the end of a 12-month period. Does that make sense? So if the revenue know that people will convert into a limited company from the point of view of reducing their tax liability. So there could be close company surcharges on any undistributed profits. The thing though that you could do as a limited company is also set up a company pension scheme, which means the company can make generous pension contributions on your behalf. And that is still the best way of extracting cash legitimately from the business. Okay?
I have a question. What are the I'm not really too well versed in it, but what are the key differences between setting up as a limited and as a sole trader?
Tax would be the main one, but then from which we've just gone through. But then there's also compliance issues with setting up as a limited company. When you set up as a sole trader, your accounts are really for two people: you and the revenue commissioner. And you to know how your business is doing, and revenue commissioner so that you will pay the correct tax on the profits of your business. When you set up a limited company, you have to now file annual accounts with the company's registration office. So you have a company is its own entity, so it can be sued or it can sue. Okay, so you have to file accounts every year. And so you have more compliance and more costs from the perspective of legal and professional and accountancy fees by setting up a limited company. And there, so from tax and from the compliance issues, there are the two main differences.
Okay.
Yeah. Anything else? No? Okay, well listen, thank you. We'll have a look later and see how the inaugural Facebook streaming went. Unfortunately, I won't be able to edit anything I don't like now because it went live. But sure, look, it's a learning curve, so we'll see where we are in the learning curve and see how it goes. Thank you very much.